Hey, if you're looking to acquire or build a strip mall and you need a set of financial projections for potential investors and lenders, then you've come to the right place because we have built a financial projection template built specifically for a strip mall concept. And so I'm going to walk you through how to fill out this template, how to create a 5-year pro forma, and just give you some tips as you go through that. So before I get into that, my name's Adam Hoeksema. I'm the co-founder of ProjectionHub, and over the last decade, we've helped over 50,000 entrepreneurs create financial projections for potential investors and lenders in all sorts of different industries and businesses. Today, I'm specifically focused on the strip mall template that we built out, and going to show you how that works. One thing I'll mention is that there's a link to be able to purchase this template down in the description of the video below. And also, if you stick around to the end of the video as a thank you for listening, we're going to give you access to a coupon code that you'll be able to use at checkout as well to take a discount off of the purchase of the template. All right, with that, let's go ahead and dive in. Okay, so we're going to start here kind of at the end of the process. This is our at a glance tab. So after you've entered in all of your assumptions about the property, about your tenants and rent and expenses, you will be able to see this profit and loss at a glance table here, some summary data about the number of units, the average square foot per unit, and average rent per square foot, those sorts of things. Use of startup funds, some different graphs and charts and key ratios that you'll be able to see here, as well as a 5-year income statement, 5-year cash flow summary, 5-year balance sheet summary, and then an income statement, cash flow, and balance sheet all broken down by month for each of the 5 years. But in order to produce all of these reports, we have a little bit of work to do first. So we're going to go back to our input assumptions tab here. And first thing you need to know is that any cell that's highlighted in blue is an assumption that you can change. And so we've got a strip mall concept here, and we're saying, hey, we're going to invest $1 million into the property. So there'll be equity of $1 million. And then we'll have a fixed asset. So the building itself will have a $3 million value. And the land will have $500,000 value. Both of these will be purchased in month 0. So basically the beginning of the model here. And then we're going to get a commercial loan for 75% of the cost of the land in the building. So a $2.6 million commercial loan at 6.5% over 300 months here. And then on our input revenue tab here, we are going to be able to put in different unit types. So let's say we have basically 2 different unit types in the strip mall. The end units and we have 2 of those, one on each end, 1,200 square feet each, and maybe these end units are more desirable, and so they rent for $25 per square foot. And the middle units, we have 8 middle units, also each one averaging 1,200 square feet, and those rent for $21 per square foot. Now you can enter in the first month that these units will be rented. If you wanted to, you could put in individual units. So if, let's say you had 10 different units, all of different square footage or different rent rates, you could add those in here individually. You can hit this little plus sign over here, and it'll show you additional rows where you can add in even more units. And then what you're also able to do here is say how many months is it going to take to get up to that full capacity or get those units rented. So we're saying, hey, it's going to take 3 months to get these 8 middle units rented out. Now, we also have the ability to put in an annual rent increase. So we've got 3% rent increase and a built-in vacancy rate. So we're just assuming some percentage vacancy each year, and we have that going down over time. So then based on that, you will be able to project, or it will forecast for you your rental income. Now, on our input other expenses tab here, we can add in operating expenses. So these expenses can be added as a percentage of total revenue or a fixed dollar amount. And so we're going to assume that we're spending 2% of revenue on advertising, so some advertising just to fill the space, and then fixed expenses like accounting and maybe some software subscriptions to manage the property. If you accept rent via credit card, you may have a credit card fee that's a percentage of total revenue. We're going to assume that maybe we do ACH or check, and so we don't have credit card fees. We've got maintenance expense for the building. Maybe this is a triple net property, so you have very few operating expenses. Is kind of the assumption here. And then on the salary side, it's just one property, so we're just going to attribute one part-time property manager at $20,000 starting in month 1 and going through the end of the model in month 60. And once you've done that, you'll be back to where we started here on the at a glance tab. And one thing I'll point out that you're probably going to run into is that you will probably end up seeing that you have a net loss. I'm almost certain of it. You'll show a net loss if the property is being depreciated. So we have in the input assumptions tab here, we have the strip mall building, $3 million value, life expectancy of 30 years. And at the end of that, that salvage cost at the end of the 30 years, it's going to be worth $500,000, which means over that 30-year lifespan, there'll be $2.5 million worth of depreciation. And so that's a major non-cash expense, but it is impacting your net income. Additionally, if you are borrowing to purchase the building, you're going to have substantial interest expense and principal payments. And so, you'll notice in this example, we have a net income of negative 38%, but an EBITDA of 78%. So, substantial differences between net income and EBITDA. So just keep that in mind as you're filling this out. Okay, so that's really it. That's the pretty simple, straightforward strip mall financial model for you. And thank you for watching the video. So now if you go down to the description of the video below, there's going to be 2 links. One will be a link to purchase the template. The other link is going to be a form where you can fill out the form and get a coupon code emailed to you. So that'll be our most up-to-date coupon code, our best offer at the time. And when you fill that form out, it's going to email you the code. You can then use that during checkout to get a discount as a thank you for making it through this video. All right, with that, best of luck as you get started. If you have any questions at all, please don't hesitate to reach out. Thanks.